Investors still flooding into ETFs, of course, as competition in the space continues to heat up. Joining us now is Jennifer Grancio. She is TCW Global Head of Distribution. TCW, as I'm sure you know, it's a leading global asset management firm with over $200 billion in assets under management. Jennifer, it's great to see you again.
It's great to be here.
So let's talk about the Engine No. 1 integration. Of course, TCW bought up Engine No. 1. That deal was announced in the summer. It closed in October. What has integration looked like?
It's actually gone very smoothly. If you are acquired by a company that has a similar approach on how they invest and a similar culture, it makes a lot of sense. So TCW is a very investor-led firm with a great investment culture. And so the integration's gone very seamlessly. A lot of people think of TCW as being at the core of the fixed income part of the portfolio, and we're great at that. But we're using the Engine No. 1 acquisition to really accelerate growth in the equity business.
Interesting. And I mean, that's something I was wondering about, because I think of TCW as a bond shop. Maybe that says more about me, but I think that that's the reputation on the street as well. And so let's talk about the ETF lineup and what it will look like. Of course, there's 3 TCW funds right now that were birthed by Engine No. 1. When it comes to the ETF lineup, how do you see the division between equities versus fixed income in the future?
Yeah, we're looking to do both. And so our point of view at TCW is that there are some investors who prefer a mutual fund, and retirement accounts often prefer mutual funds. But there are a lot of investors that are buying ETFs. They want that vehicle, and so we're just going to meet the demand. And so on the equity side, we have some terrific long-term core equity strategies. Many of those flows come in SMAs today. And then when it comes to these mega trends, where we think the average investor is too tethered to the index and they're missing some of these big opportunities, on the equity side, we'll run those as ETFs. And when it comes to fixed income, similar approach, where we have some great core mutual funds, but we will expand the fixed income ETF lineup as well. We're in with the SEC on that, so can't talk about that quite yet, but we'll be able to soon.
Well, to that point, I mean, just broad brushstrokes, when it comes to mutual fund to ETF conversions, those have been picking up. Of course, BlackRock filed plans to do that. I think it was last week, and then you've had Morgan Stanley in the past month or so also come out with a conversion. When you think about, bringing the ETF lineup up to scale, can you talk broad brushstrokes about whether that's going to be through organic new fund launches versus conversions, for example?
Yeah, it'll be a combination. And so if you look at the equity business for us, we think that people have a way to get index exposure. You can use a variety of vehicles for that. But again, we think the market is underexposed to a lot of these mega trends. So what we do in Net Z around energy and power transformation, or what we do in SUPP on supply chain reshoring, if you only are in the index, you're very underexposed because the index has gotten so concentrated in the big tech names. And so from a lineup perspective, we have those as ETFs. We also at TCW have terrific equity strategies on artificial intelligence. We've been running it for many, many years, a very long and strong track record in that space. We have another sort of a thematic or a tilt product that focuses on great businesses that have a big compounding revenue projection. And so those are places where we have a mutual fund. Most of the assets aren't in retirement accounts today. So we'll simply take the mutual fund and convert it into an ETF.
And so it sounds like what you're saying that is when you're thinking about conversions and which funds would be appropriate to convert, it's those mutual funds that don't necessarily have a heavy presence in those retirement accounts.
I think that's right, because as TCW, we want to be servicing all those clients. And so if we have clients that are using a mutual fund in retirement accounts, we want to continue to service those clients. Those are great clients of the firm. But in other areas where the market is demanding ETF or their newer strategies, or their strategies like these megatrends like AI, for example, that are really poised to grow, that's a place where we and we think other managers should look at doing conversions.
Okay, that's important context there. And so let's talk a little bit more about the equity side, because I think about the Engine No. 1 ETFs that are now, of course, housed at TCW. It's very thematic, transformational. When you think about, bringing new equity funds to market, are they still going to have that sort of flavor to them? Or are you thinking about launching broad index tracking, very cheap sort of funds?
Yeah, we have, as TCW, we have an index fund, which is Vote. And so for people that want an index fund, we think that is a better index fund. We think about 80% of the annual shareholder votes every year are driving forward economic expansion for the company. Bigger indexers are conflicted. And so that's a great alternative, big, large cap index product. Everything else we do is active. And so what you should expect to see from us is active. And if we look at the market environment that we're in right now, one, we have this portfolio construction problem where people are too linked to an index, which has gotten very, very concentrated. And then on the other hand, we have very high rates. And so if you think about an environment where money's not free, if money's free, it's a little harder for maybe one company to differentiate versus another. But with higher rates and higher cost of capital, we have very strong conviction that we're able to understand how a system like power and energy changes. But then we're able to find the best managed company with the best prospects, and they're going to further pull away from other people in their category. And so we think this is a great market for the next 10 plus, however many years, where money's not free. This is a great market for active.
And before we say goodbye, I do want to get your thoughts on a trend that I've noticed in the industry that I'm sure you are acutely aware of, and that's that it feels like it's easier than ever to launch an ETF. But when it comes to actually gathering assets, that can be very, very difficult. And in your seat as the head of distribution, how important is the distribution game right now, and how much harder has it gotten?
I think it's always been hard, and it's probably only going to get harder. If that's maybe a way to answer that question. And if you think of what we do as asset managers, I would say you always want to invest with a firm that is investment-led, investor first, which we certainly are at TCW. And you also really need to look for ways to have a clear message, find products and strategies that are in high demand with clients. And then we work with a lot of advisory firms as partners to scale the business, because distribution is very important to scale these products. People want to see products that are healthy and growing.
All right, Jennifer, great conversation as always. Glad we could spend some time together. Our thanks, of course, to Jennifer Grancio of TCW.